Good morning. You're watching Business World Live. I'm Danie Laurel, TGIF. It's 10 a.m. this Friday morning here in Metro Manila. We are about 30 minutes into this last trading day of the week. Let's go straight to our banner story. Banks' bad loans rose to their highest level in 6 years. That is in the month of July. Gross bad loans climbed 32% to 290 billion pesos from almost 220 billion pesos in July of last year. Industry-wide non-performing loan ratio stood at 2.67%. This is the highest since August 2014's 2.74%. The Bangko Sentral projects the ratio to rise by 4.6% in December. That's amid interrupted economic activities due to the pandemic. The Tran Graduate School Dean Emmanuel Lopez says the continued rise in non-performing loans is no surprise with the economy shrinking into a recession in the second quarter. GDP plunged by a record 16.5% in that quarter, while approved foreign investments fell 69% to 15.5 billion pesos. This is from data from the Philippine Statistics Authority. Bloomberg analysis says spending wave of bad loans would continue to flood the banking sector with the spotlight on riskier debtors such as SMEs and households. Now, still on the banking space, S&P Global Ratings urges virtual banks in the country to tap the youth and the unbanked for growth opportunities. The Debt Watcher says digital banks may carve a niche by catering to these segments which are, quote, long ignored by traditional banks. It says virtual lenders have an advantage as their reduced need for infrastructure gives them enough space to offer services at a lower cost. We'll go back to the banks in a bit, but right now I want to kick off the last trading day of the week's market report with a quick check on our local currency. Take a look at that. We are trading at 48.520 to the greenback. That is a bit of a weakening compared to what we saw yesterday, but nevertheless, still, of course, very strong. You can see on my screen here our year-to-date levels here. We've just been stronger and stronger. We're actually gaining around 4% to the greenback in the past year. I just want to take a quick check on how that relates to the oil prices. You can see the blue line of my graph here is the commodity one, that is the WTI crude oil, and that has been trading at less than $40 a barrel. So again, it's becoming cheaper. And usually when the oil prices get cheaper, the peso strengthens, and you can see that on the right part of my chart here. The inverse relationship between the strengthening of our currency and also the cheaper oil prices. And this, according to RCBC's Mike Ricafort, the dollar weakened as oil prices continued to decline. And the lower global oil prices recorded over 2 months could have reduced the demand for US dollars to pay for imports. So the lower our import bill, the stronger usually our currency is. And I just want to highlight a maximum chart here just to show you guys how, if I can actually pull that out, maybe a 5-year chart, how we're actually, and this is the green line, this is the peso, strengthening compared to 2014. This is from 1990 until 2019, but you can see here that we are still at higher levels, but nothing compared to what we were seeing before, during, for instance, 2004 to 2009, when we were breaching above 50 levels to the greenback. So we have actually seen our currency strongest in the past 4 years. So let's take a step back and take a quick peek at how equities are going all over the world. Let's kick off with Wall Street. You can see the Dow Jones overnight down by 1.5%. S&P 500, that's the benchmark over in the US, also weakened by 1.8%, and the Nasdaq continuing those losses there, down by close to 2%. Now, this after another sell-off happening in the United States when it comes to the mega cap technology shares. This sent the U.S. equities to their fourth loss in 5 days. And meanwhile, treasuries were rising with the dollar as safe havens, as investors started flocking back into safe havens. Now, in the US, the NASDAQ lost more than 2%, and that was actually the worst during that period. There were continuing concerns that valuations have gotten stretched too far. There has been a 5-month rally, particularly in tech shares. Another group of stocks that had suffered, this related to the oil story here, energy companies. So that had plunged as crude oil dropped back to $37 a barrel over in New York. Now, most global stocks as well are heading for another back-to-back weekly decline. That's after we saw a rally in March that added $7 trillion alone to the US equity values. I just want to take a quick peek at how Asia is opening. Analysts were seeing the futures rather mixed, and now you can see how they are in fact trading in a very mixed way. You can see that Japan is opening in the green this Friday morning, but for instance, it's a very mixed picture over in China, with the Shanghai Composite down by 0.2%, but the Shenzhen actually gaining. And when you look over at Singapore, it's opening in the back foot down by 0.5%. Now, what about our own stock market? Recall that yesterday we were already below the 6,000 level. We had stayed at that level. We are still staying there, albeit with some brighter options here. We are now up by 0.4%. Just to highlight this, I had checked this at the open at 9:30, and we had opened on the back foot, but we are right now paring back those losses and swinging towards gains. Now, this according to analysts, we shed 0.5% yesterday, even as we had opened at 5,955. So that was actually hitting a high of 5,973 yesterday, but we settled at our intraday low. And I'm going to pull out the 3-day chart for you so you guys can actually see that. We're down by 1.8% in 3 days. Now, what is going on here in terms of our local bourse? Phil Stocks' Claire Alviar is saying still a lot of doubts on the coronavirus situation in the country. We had jumped quite a lot when we had that day wherein we saw the lowest new infection cases since June 14. But now, the health department has actually not confirmed whether the coronavirus curve has flattened. This, according to Phil Stocks' Claire Alviar, the health department has said that there were not complete reports that were being given. And in fact, we did see increasing numbers yet again. Yesterday was more than 3,000 new cases. So this was, according to her, the primary drag on sentiment. Nevertheless, value turnovers stood at 6 billion pesos yesterday. And the good news of yesterday's trade, net foreign buying, foreign investors snapping that 16 days of red. You can see that on the right side of my terminal here. And finally posting net foreign buying, where there were purchases of 421 million pesos worth from foreigners back into our boards. Take a quick peek at the different sectors here and which ones are bringing in the money. Property firms up by 0.8%, together with holding firms and services. However, industrials and financials still sitting out that recovery period. Which ones in properties are on the leaderboard? Let's take a quick peek at our leaders and laggards for this Friday morning's trade as my terminal starts running here. There you go. Okay, let me just pull that up for you guys and see whether the property space has more people in the leaderboard than the other sectors. Just pulling that out for you here in my terminal. You can see here LTG is actually the main leader here. That's up by 4.2%. And there's a lot of news actually surrounding this, and I want to just highlight that because of the fact that PNB had mentioned earlier on, and this from an article in Bloomberg, that they're looking to sell some of their prime properties here. Recall that Lucio Tan had actually injected some of his equity capital into Philippine Airlines, which has been sustaining losses. PNB as well sustained a drop of 98% in its second quarter net income. LTG Group has actually been posting gains in the first half of the year. A lot of things going on here. LTG Group up by 4.2%. We'll be watching that closely later on. But meanwhile, as I mentioned, properties, you do have SM Prime in the leaderboard. That's what up by 1.6%. The worst performer right now is First Gen. That is down by 1.5%. Now, speaking of energy, I just want to take a quick peek at the Ayala companies, especially their energy unit, AC Energy, as that relates to this Infigen bid. Now, recall that they did have the stake in Infigen via a unit called UAC Energy. Infigen is one of the biggest renewable energy players over in Australia. They have now sold that stake, and that's on the back of Infigen possibly being delisted from the stock market soon. UAC Energy Holdings was 75% owned by the Ayala's AC Energy, and it had 20% in Infigen Energy. They have divested that for 92 Australian dollars per share. And you can see that that's the actual price that Infigen is trading at right now. They have sold their stake over to their former rival bidder, Iberdrola, which of course won the bid. This is a Spanish multinational utility. They won the bid on that, and AC Energy saying, okay, you guys can have it. But they did mention that despite this withdrawal from Infigen, the venture unit will continue to invest in the country, so they will still be in renewable projects in the pipeline over in Australia. You can see AC actually up by 0.3%, but AC Energy feeling the pain. That is being sold off by 1.9%. Another one that is looking at the listing. Take a look at Pepsi Cola. They have now announced officially that they will be delisting from the Philippine Stock Exchange, which actually suspended as of the moment. And this comes after their public ownership requirement, or public ownership has dropped below the minimum requirement. So the PSE requires that everyone keeps at least a 10% float. Some even up to 20% is the goal. And they're not able to do that after they sold 31% of their shares to Lotte Chilsong Beverage. And right now they're actually, the public float is only at 2.1%, so they're not able to increase that to 10%. Lotte Chilsong meanwhile will be doing another tender offer to buy the rest of the 2.1%, which are held by other investors, and that new tender offer will be on September 16. Now, more other news here on things going on, especially in the media side. Let's take a quick peek at the ABS-CBN stocks. This, as the NTC has now recalled, or officially recalled, ABS-CBN's frequencies, and that is for 23 radio stations, 42 television stations, and 10 DTTB, so digital terrestrial television broadcasting stations. This follows the House of Representatives' denial of the network's application for a franchise renewal, which was on June 10. You can take a quick peek at ABS-CBN losing 1.7% and now trading at 6 pesos and 98 centavos. And finally, I just want to take a quick peek at one other energy company that is now doing a pivot, and that is Greenergy, which is of course owned by Antonio Tiu, who also is owning IRC. Antonio Tiu's Greenergy has now forayed into the production of medical cannabis. So it has built a new Australian subsidiary here with a United States firm. So this is actually called the Yakuru Group, and it will hold a 51% equity stake in that. Now, what is the biotech that will be focusing on? Basically medicinal hemp, and this is of course related to cannabis products. Even as this is still of course illegal here in the Philippines, the Dangerous Drug Board had previously signaled its intent to consider allowing cannabis oil in treating rare forms of epilepsy, and Greenergy said they saw a great opportunity in investing in this ahead of the government's decision. So of course in Australia, therapeutic goods are actually allowing the sale of cannabidiol deal in over the counter. So this has actually caused, and you can see on my screens here, quite a rally for the shares. You can see that in the past few days, it's already jumped 24%. So a lot of things going on here. The share price rising to the highest we've seen since November 12. That's on the volume of 2.7 times the monthly average. Now, more on markets later on in the broadcast. We've got with us AAA Equities' Chris Mangun. Okay, let's check in on some big headlines we are watching as we end the week here. Economists still are not seeing the light ahead of the tunnel. That's as external trade weakens and continues in July. The July figures mark the fifth straight month of a decline for exports, while imports contracted for the 15th consecutive month by 24%. Both figures come off worse than the government's projections. ING Bank senior economist Nikki Mapa says the severe contraction in major imports only reflects fading domestic demand with the country in a recession. University of Asia and Pacific senior economist Sid De Rosa, meanwhile, said the continued contraction of the exports and imports reflect weakness in both the domestic and world economies amid the COVID-19 crisis. Both Mapa and De Rosa noted that the sustained drop in trade output could slow down economic growth in the next few years. However, Philippine Exports Confederation President Sergio Ortiz Luis said that while it would be hard to reverse the decline in exports this year, the slower year-on-year declines would hopefully make it possible for export output to even out by the year end. The July trade deficit stood at $1.8 billion. That is lower than the $3.6 billion gap in the same month of last year. The National Economic Development Authority, or NEDA, says a temporary uptick in urban poverty rate may take place next year. This is due to the number of households disproportionately affected by the pandemic. Now, during a budget hearing in the Senate, NEDA Chief Carl Kendrick Chua said the projected range in urban poor statistics for 2021 is at 15.5 to 17.5%. Chua said that before the pandemic, the government projected poverty rates to drop to about 14%. The government's poverty incidence assessment is done every 3 years, with the next assessment in 2021. On the other hand, Chua noted that the pandemic's impact on the livelihood of the rural poor had not been as severe. The unemployment rate fell to 10% in July from 17% in April. That's at the height of the COVID-19 lockdowns. Chua says gradual economic recovery may lower the jobless rate to 6 to 8%. The country's general government debt will likely reach the equivalent of almost 47% of GDP by the end of 2020. This as the government borrows more to fund its pandemic containment measures. National Treasurer Rosalia De Leon told senators at Thursday's budget briefing that if realized, this will be the highest general government debt level in 14 years, or since the 49.3% posted in 2006. Last year, the debt level stood at just 34% of GDP, and that has been steadily declining since 2017. But Treasurer De Leon said that despite the country's increasing debt stock, much of the budget still goes to, quote, productive spending, since interest payments as a share of revenue and expenditures remain low. She added that the debt stock will taper off once the government returns to fiscal consolidation and to a fiscal deficit of about 3% of GDP. Recall that the government plans to borrow a total of 3 trillion pesos this year to plug its budget deficit, which is projected to hit about 9.6% of GDP. Investors continue to take cash off the table. That's as sentiment remains cautious, says Chris Mangun of AAA Equities. But he also says trading volumes are picking up, and that's a sign of investor interest. What does that all imply on this last trading day of the week? Well, he is here with us right now to tell us just that. Good morning, Chris, and welcome to the broadcast.
Hi, Danie. It's been a while.
Exactly. It's been a while, and I just want to know your sentiment right now. I quoted your yesterday's report basically saying that, there's still a lot of caution there, but we finally saw that first day in several sessions of net foreign buying. Do you feel that despite the caution, there is still some optimism?
Yeah, the net foreign buying did come as a surprise. However, I'm not too excited about it. The market really is still very slow. I mean, even today we're not seeing a lot of action. The most traded stock is PNB because of the announcement that they will reassess current market value for their properties and that they may be selling some of those properties. The market's just really moving sideways. I think investors are not that excited or that enthusiastic of getting back into the market, uh, despite these valuations. I think it mainly had to do with the reimposition of stricter lockdown restrictions back in August. I think that really soured the sentiment, and our market's just moving sideways, moving with the flow. So uh, I think this market has one more leg down before we could
Chris? Okay, I'm
hello.
hearing.
Yeah,
Yes.
can you hear me?
Okay. Yes, it just was choppy a bit. Let's talk about PNB because you just mentioned that. So let's go back to the broad markets later on. But you mentioned that PNB is just rising right now. Why is this? I mean, how big of a deal is reevaluating their properties? Are they going to be selling that? Do you feel that that's going to be used for, I don't know, the recovery of PAL, their LTG Group? Why is LTG Group also the best performer right now?
Yeah, well, I mean, the performance of PNB is going to reflect on its mother company LTG, but even beforehand, PNB's book value was I think at 100 pesos per share. So the stock was trading way below its book value, and if they realize current market value for their properties, I think it's going to push it even higher. And so there's a lot of speculation that the price of the stock should be much higher. Now, whether the conglomerate uses it to cover losses in other companies such as PAL, that may be their strategy to keep them afloat. But right now, it's the biggest it's the biggest gainer and also most traded on the stock market. So that just tells you the sentiment of investors right now. There is a lot of speculation in different indexes in the market right now and on different issues, but the market as a whole is just boring. It's not going anywhere.
Let's talk about banks as related to PNB. Do you feel that other banks will be following suit here? And if so, there's actually quite some upside if banks start reevaluating their portfolios in terms of the property or real estate.
Well, I think it's a different situation for PNB, but in terms of the banking sector, there's a lot of uncertainty. Uh, Despite fiscal and monetary stimulus from the central bank, credit growth has not picked up, and I think it's mainly because the banks are holding on to cash. Banks are holding on to extreme liquidity right now, and I think it's in preparation for the rise in NPLs. Now, nobody's going to know what uh, what those and how high those
Mm.
non-performing loans are going to go up. There is a lot of concern with SMEs. I think the bigger concern is on the SME side as compared to consumer lending. But we're just going to have to see. I think the banks are taking extreme precautions. They've been holding on to a lot of liquidity, but if the NPLs don't rise as much as they expected to, then I think you're going to see them flood the market with liquidity at lower rates, and that's gonna trigger higher consumer spending, which will be good for the economy. But
Okay, so
as
I
of the
mean,
moment, yeah,
mhm.
go ahead.
Yeah, you mentioned the NPLs, right? And that's our banner, the highest soured loans in 6 years. But was this not already expected and priced in when you're looking at these valuations, which are significantly low? You mentioned the book value of PNB is much higher than we're seeing, the stock actually trading. And do you not feel that they've already set aside aggressively provisions for those non-performing loans? Why is there still downside risk, and why is this not yet priced in these very depressed valuations?
I think with current valuations, they are already priced in, but I think the banks are still watching whether FISP bill the government's still holding back on the FISP bill. They haven't fully implemented or fully passed that law because they want to see if the banks have enough buffer. Now, the banks have been building that buffer for most of the year, and if the government sees that they can take it, they may not pass that FISP bill, and that's what the banks are afraid of. And that's why they're playing it really conservative right now.
Okay, so that's
So
actually one catalyst that there's still an upside catalyst in terms of the FIS bill. Chris, I want to talk
Mhm.
about Greenergy because this is another one that's just been off the charts. Yesterday up by more than 8%. Is that this pivot into biotech, was that in any way speculated beforehand? Does this come as a huge surprise? And does that have any fundamental bearing on the company, which is of course in energy? So nothing at all to do with biotech and medicinal marijuana.
Yeah, well, since in the last few years, Greenergy has really been aggressive in pursuing new business strategies, and this is one of them. There is a lot of speculation in different issues in the market right now, and I think that has driven the price of that stock higher. But it may take a while to come in for that to translate into actual fundamentals. So because it is highly speculated, at any time the trend can turn on you. So it may take a while before it realizes the current business strategies that it's taking.
But are you excited about these smaller stocks? And would you, before you go right now, I mean, you were mentioning that if you take a look at the index stocks and you take a look at the bigger blue chips, it's quite boring. But when you take a look at, the second liners like PNB, for instance, and stocks like Greenergy, do you feel that there's some more excitement there for the retail investors?
Yeah, I think for the last few months, retail investors have really been jumping in and out of these speculative issues. We saw a lot of speculation in mining issues a few weeks back because of the high price of metal commodities in the world market. And now you also saw a lot of speculation in internet companies with Ditto coming in. You had Now Corporation. Investors are looking for value in these highly speculated issues that have been battered because of the pandemic. So it has been exciting for retail investors, but it looks like it's coming to an end for me. I think over the course of a month or two, we're going to see investors come back into the bigger names. I think once a broader recovery of the economy comes into light, which I'm hoping for in the fourth quarter, I think we're going to see the market move higher as a whole.
Okay, so hoping for that. So in the meantime, some exciting opportunities for the smaller players, but also still waiting on that broader based economic recovery, especially for our big guns that are, of course, the engine of our economy. Thanks for that. That was, of course, Chris Mangun, AAA Equities. And that's a first look into the business day. Today is the last trading day of the week, September 11, 2020. Catch us again Monday morning, 10 a.m. I'm Danie Laurel, and we are One News.